Come on, guys. Let's now solve question number 4 from our January 2025 examination. This question number 4 was on amalgamation topic, a 14-marker question where they've asked accounting in the books of transferor, transferee, and in the amalgamated company. They've not asked much. See this. Following are the summarized balance sheets of Light Limited and Bright Limited. Our question is in Light and Bright. Who is transferor? Who is transferee? We don't know right now. Scroll down, finish the balance sheet, come to the bottom. Notes to accounts also, you just scroll it through. See, a company Rainbow Limited is formed, okay, to acquire assets and liabilities of both the companies. So Light to Bright to, both are transferors. Rainbow is transferee. There's a new company called transferee. What do they want? Read the last line. You'll understand their requirement. Realization account and equity shareholders account in the books of both Lighto and Brighto. Both transferors, both the transferors, they're asking two ledger accounts, realization and equity shareholders, and opening balance sheet in the books of Rainbow. So we should prepare Light books only realization and equity shareholder account, in the books of Bright realization and equity shareholders account, and then balance sheet in the books of Rainbow with notes to accounts. They have not mentioned it, but we have to do a table computing NATO PC. I would very strongly recommend you to do it. If not, the chances of messing up in the answer will become more. You get this? I know CR7 is the best, but you should not mess up your answer. Come on. What is the name of the transferor? Light and Bright. Name of the transferee? Rainbow. Nature of amalgamation? We don't know. Too early to judge. It can be merger, it can be purchase. We'll see it later. Read adjustments, make any markings if there is any, and then start with the solution. So to acquire assets and liabilities of both the companies, assets are acquired at book value except land and building of Light. Wait. With regard to Light, it is not amalgamation nature of merger. Why? They are taking assets at book value except land and building. Land and building is taken at revalued figure of 62 lakhs. First, before we forget, here we'll write 62 lakh land and building of Light. This is not taken at 58. This is taken at what value? 62. 62. Okay, notes to accounts only mark madidini. Illi PP also I'll make a marking. This is value is changing. Then the next thing, what are they telling? Other assets of Bright Limited are absolute and scrapped and sold for 50,000 by Bright. Okay. Here you have other assets, no, of Bright 1.75. This is not taken over by new company. This is sold by old company only. So obviously what's happening here? Again, this is amalgamation nature of purchase. Are you getting it? Now there is one small element of doubt. All assets and liabilities are taken over. When this 1.75 worth of other asset is sold by Bright Limited, that consideration whatever they receive, is that cash taken over by Bright? Is that cash taken over by Rainbow or not? They have not told. That absolute assets 1.75 is sold for 50,000, no? When that is sold, they would receive cash. Will that cash be taken over by Rainbow or not? They have not told. However, it doesn't matter. If that is taken over, that also transferred to realization. If that is not taken over, to that extent it is not transferred to realization, that 50,000 cash will be used to settle shareholders. It will come in shareholders account. The question is, should it come in shareholder or should it come in realization? This one part where the mention is not made in the question. You have to make an assumption and mention it at the end of the question. What is your assumption? The assumption that I am going to deal is, it is like both the companies are coming together to form a new company. All the assets are taken over, including that bank balance or cash balance. So I am assuming that other assets are sold by Bright. That consideration what is arise is included in cash, or it is separately taken over by way of bank by the Rainbow Limited company. That is my assumption. However, let's wait and see what will the institute, because the day I am recording this is the one day after the examination is over. So I don't know when the suggested answer will come. By then, if there is any change, they would have treated the alternative assumption. But what I would want you to notice, whenever the paper is sent for correction, the evaluator who is correcting the paper will be given more than one correct answer. But the suggested answer what comes to you on the website will have only one correct answer. So there are a lot of times where your answer is not exactly suggested answer, because assumption, only one assumptive answer is mentioned in suggested answer. Alternative assumption wala answer will still get full marks because it is included in the evaluator's key answer sheet. Are you getting it? Let's further proceed. So I've made marking next to these two items because their value is changing. Light and Bright Limited will be issued 80,000 and 64,000 equity shares of rupees 100 each in Rainbow in lieu of their purchase consideration. This is like lump sum cum payment method. Lump sum because total amount is mentioned. They have given details of payment. So it is like lump sum cum payment. So I would write name of the transfer is Rainbow. Nature of amalgamation is purchase because not all the assets are taken over. In case of Bright, in the case of Light, assets are taken over other than at book value. One item, land and building. So all the 5 conditions are not fulfilled. Even if one is breached, purchase. Purchase consideration, we can call it, it's like lump sum amount is given and payment details are given between lump sum and payment method. And accounting in the books of transferor, Light and Bright should be realization method. Accounting in the books of transferee should be purchase method. So shall we start with what they've asked us to do? They've asked us to do accounting in the books of Light, transferor. Remember to transfer all the assets and liabilities whether taken over or not at book value to realization account. All the assets and liabilities whether taken over or not at book value to realization account. That is the same language that we used in the revision video if you listen also. So you will get that right. So let's see property, plant and equipment. Let's start with assets. PPE will go to note number 3. Where do we go to? Note number 3. Come to note number 3. In note number 3, what assets do we have? 58, 7.5, 3.2, land and building, plant and machinery, other assets. Remember, land and building is taken over at agreed value, but when you transfer to realization, it has to be at book value. Agreed value will come only in the new company's books. All the adjustments given in the amalgamation question will be in transferee's books, not in transferor's books. All the assets, whether taken over or not, should be transferred at book value. What value? Book value. So entry will be assets will have debit balance. We have to credit them and debit realization. Realization account debit 2 land and building, 2 plant and machinery, 2 other assets. Realization account debit 2 land and building, 2 plant and machinery, 2 other assets. Value 58.58 lakh, 7 lakh 50, 3 lakh 20. I am doing in the books of Light. After I finish Light, I will do Bright. Let's not mix up Light and Bright. Names is also confusing. Okay. So assets are transferred, PPE is transferred. Come to balance sheet here. PPE 68.7, this item done. See the next item. Inventory 5.75, trade receivable 4.3, cash and cash equivalent 3.15. Shall I transfer these 3 items also? Let me transfer. So I would write in my realization account debit to inventory, realization account debit to trade receivables, to cash and cash equivalent. Inventory 5,75,000, trade receivables 4,30,000, cash and cash equivalent 3,15,000. Khatam. All the assets are transferred. Balance sheet asset side, clean sweep. Now let's see liability side. Liability side, we have trade payables. What do we have? All the liabilities also should be transferred. Trade payables, long-term provisions. But when we say all the assets and liabilities should be transferred except capital and reserves, except capital and they will be transferred to shareholders account. So I'll transfer 3.4 and 1.5 to realization. These both are liabilities. They have credit balance. In order to close them, I need to debit it. Journal entry will be long-term provision account debit, trade payable account debit to realization account. In realization account, I'll write by long-term provision, by trade payables. Amounts are 1,50,000 and 3,40,000. Is this right? Fantastic. By this, we are done with transfer of all assets and liabilities. Once all the assets and liabilities are transferred, you remember the story. Pack the assets, pack the liabilities into the box. Give the box to transferee company. Box is realization. Box is going out. Credit realization, debit Rainbow. So journal entry is Rainbow Limited account debit to realization. In realization account, I will write by Rainbow Limited. If you remember the story, packing, giving, collecting, end of the problem. I will write here purchase consideration due. We are giving the box. We are expecting the PC. How much is PC? It's given in the question. Come here. They've told the purchase consideration is 80,000 shares to Light Limited, 64,000 shares to Bright Limited. 80,000 shares of rupees 100 each. So my consideration is 80,000 into 100. How much is 80,000 into 100? 80,000 shares into 100, 80 lakh. So I've written this. Next, I should receive the consideration. Am I right? When I should receive the consideration, journal entry, I'm waiting there. They will check the box and then they'll give me money. When they give me money, I will write the entry, whatever they give, equity shares, preference shares, debentures, cash, bank, debit, credit, their name, Rainbow Limited. In this case, we're receiving equity shares. Entry is equity shares account debit to, equity shares in Rainbow Limited account debit to Rainbow Limited. We are not preparing Rainbow Limited ledger. We are not preparing equity shares in Rainbow Limited ledger. So that entry I'll remember. I have received, but I will not write it anyway. Later I will come back. If there is any assets not taken over, liabilities not taken over, I will pay. There is all assets taken over, all liabilities taken over. In case of Bright Limited, other assets are not taken over. In case of Light, all assets and liabilities are taken over. I'll come back. When I come back, I'll pay realization expense, which is not given in this question. Then what will I do? I will close my shareholders balance. Everything in the balance sheet is gone, no, except share capital and reserves. How much share capital, how much reserves? Share capital 50, reserves 2, 18, 7. These three items, I'll close them by transfer to shareholders account. All of these will have credit balance. I should debit it. Equity share capital debit, statutory reserve debit, general reserve debit, P&L account debit to shareholders account. In shareholders account, I'll write by equity share capital 50 lakh, by statutory reserve 2 lakh, by general reserve 18 lakh, by security premium 0. Baribeka 0 if you want me to. By P&L account 7 lakh. Everything is transferred. Now I need to settle them. Before I start giving them, I should first identify my realization profit or loss. I told no, we'll take all the debit, credit, do the calculator. That is when we do journal entry. Here, very simple. You have the ledger ready. Take the total, identify the balance. Take the total 80 plus 3 lakh 40 plus 1 lakh 50. What do we get? 83, 84, 84 lakh 90. 84 lakh 90 on the credit side. Take the same total on the debit. Identify the balance as equity shareholder account. This is my realization profit because it's realization profit. Sorry. If it was on the other side, it would have been loss. How much is the profit? 3 lakh. So in realization account, you will write it as 2 equity shareholder. I had told you the journal entry, realization account debit 2 equity shareholder. In equity shareholder account, you will write by realization account. Okay, this is profit. If in case you are finding this approach slightly new, you can always go back and watch the quick revision video. It is taught in the same pattern in the form of a story, wherein you will be able to crack the question on amalgamation. About 15-20 minutes video. Realization account debit, equity shareholder account will write by realization profit 3 lakh, profit is closed. Now, whatever we received as consideration from our shareholder, from our Rainbow Limited, we should give it to them. What had we received? Equity shares in Rainbow Limited. That is asset for us. Now we'll give it to these equity shareholders. Journal entry is equity shareholder account debit to, what did we receive? Equity shares in Rainbow Limited. We had received 80 lakh worth of shares. Check the total here. Is it 80 lakhs? Tada! This gets closed. Whatever we did in the last 10 minutes, we should repeat now. Last 5-6 minutes, we should repeat. Why? We did it for which company? Light. We should do the same thing for Bright. What should we do? Transfer all the assets to realization. All the assets. One start marna. Come from the beginning again. Notes to accounts. What are the assets that we have? 44 lakh land and building. 4.5 plant and machinery, 1.75 other assets. Remember, all the assets, whether taken over or not, should be transferred to realization at book value. Entry is realization account debit to land and building. Realization account debit to land and building 44, to plant and machinery 4.5, to other assets 1.7. Sir, but other assets is not taken over. Whether taken over or not, at book value, we should transfer. All the assets transferred. Next, all the liabilities has to be transferred. Liabilities, this is reserves. Come back to the balance sheet. We're done with this 50.25. Other assets that we have is 7.1, 5.8, 2.85. Inventory, trade receivables, cash and cash equivalent. Shall I transfer these? Okay, again, these assets will be credited, realization will be debited, realization account debit to inventory 7 lakh 10, to trade receivables 5.8, to cash and cash equivalent 2 lakh 85. All assets done. Now liabilities. Liabilities, there is only one trade payables. Why? Long-term provisions is not there. This capital and reserve will be transferred to shareholder account. So what is the entry to transfer liabilities? Very simple. Liability has to be debited, realization account has to be credited. Entry will be liability account debit to realization. In realization account, I'll write by trade payables, by trade payables. How much is by trade payables? 2 lakhs. Let me write here 2 lakhs. All the assets put into the box, all the liabilities put into the box. Box name is realization. Pack the box, give it to transferee, Rainbow. When you give it to them, box is going out. Credit realization, debit Rainbow. Rainbow Limited account debit to realization. In realization, I'll write by Rainbow. How much? 64 lakh. Why is this 64 lakh? That is the PC due. Shall we write this PC due? Oh, they've given here 64,000 shares. 64,000 shares is our PC. See, 64,000 shares into 100 rupees per share. 64,000 into 100, 64 lakh. I'll wait there. He will give me consideration in the form of equity shares. That journal entry is equity share in Rainbow account debit to Rainbow Limited. That will not come in realization account or equity shareholder account. We're actually preparing only two ledgers. That is what has been asked in the question. After that, I come back. Is there any assets not taken over? Yes. Other assets is not taken over by Rainbow. I will sell that. Am I right? At what value is it sold? They have told it is sold at rupees 50,000. When it is sold at 50, journal entry is bank account debit 50 to realization. We should not write other assets. Why? That other assets is already closed by transfer to realization. Any profit or loss also should be through realization. Just blindly write the entry for sale price. Don't try to identify profit or loss. I've taught this to you. Entry is bank account debit to realization. In realization account, you'll write by bank. This is for other assets sold. This is for other assets sold. Is to other assets value 50,000. Clear? In realization account, I've written by bank. Am I right? By this, that asset not taken is also over. Is there any realization expense incurred? No. I come back, then I'll start paying my equity shareholders. First, I'll identify money payable to equity shareholders. How do I identify? Transfer that share capital and reserves. 40, 15, 5, 4. This is the money belonging to equity shareholders. Transfer it to their capital. Sorry, shareholders account. Entry is equity share capital debit, general reserve debit, security premium debit, P&L account debit to equity shareholder. In equity shareholder account, I'll write by equity share capital, by general reserve, by security premium, by P&L. What is the values? Equity share capital 40, general reserve 15, security premium 5, P&L 4. Done. Next, I should close my realization account, identify profit or loss to transfer to shareholder. Check the totals here. 64, 66, 66 lakh 50. Deduct all of this, identify the profit. Yeah, this is the consideration from other assets. Correct? No. This is our realization profit or loss. Oh, wait. What we'll do is this bank consideration, whatever we receive 50, that is also taken over by them. No. So it is not like after that we sold it. We sold that and then we packed that cash also and sent it to them. If you don't, this 50,000 should be shared to shareholders. What I'll do is other assets are transferred. Now I'm going to transfer this bank 50,000, whatever as I have, also to our shareholder, also to our Rainbow Limited. I'm packing it and sending this also to them. I've sent 50,000 additionally to them. Now you won't get any realization profit or loss. It matches exactly. There is no realization profit or loss. If in case that 50,000 I keep it with me, that 50,000 will become my realization profit. I'll share it to my shareholders here and 50,000 I'll pay to them using that bank balance. So either book that as profit and pay 50,000 to my shareholders, or assume that 50,000 is taken over by Rainbow Limited and give it to them. In this case, I mentioned it in the beginning of the question. I've assumed that this 50,000 consideration received on sale of other assets is sent to Rainbow Limited. If you make assumption that it is not given, this 2 bank 50,000 will appear in shareholders account, and here you will get realization profit that will be written here. 50 credit, 50 debit. It will match same to same. Both the cases you will be awarded full marks in the exam. Don't worry about the same. Understood? So realization profit or loss is not there. How much is the money that we should pay to equity shareholders? 40 plus 15, 55. 55 plus 9, 64. That is the exact value of equity shares that we got from Rainbow Limited. Give it to your equity shareholders. We are done with this problem when it comes to accounting in the books of transferor. They've asked us to do balance sheet in the books of transfer. Very sweet balance sheet. Whatever is transferred, you write all of those assets. But I will do it with notes to accounts. Before that, I'll do NATO. Can I? Come on, let's do NATO now. In the NATO, what would I write? I'll write all the assets taken over, all the liabilities taken over at the agreed values, and I will also write the PC to compare goodwill or capital reserve arising and then post it. Let's begin with this. This they have not asked. Begin with the assets in the balance sheet. What assets are there in the balance sheet? Land and building, 58. But this 58 has a star. Why? 58 is to be taken at what value? 58 is to be taken at 62. So I would write land and building is agreed to be taken at 62 lakhs. And what do we have? This 44, it's taken at 44, no problem. 62 plus 44, 1 crore 6 lakh. This 1 crore 6 lakh is what will appear in PPE, in consolidated, sorry, in a post amalgamation balance sheets, notes to accounts. After land and building, we have plant and machinery. Plant and machinery 7.5, 4.5. I would write them exactly same. Plant and machinery 7.5, 4.5, 1 lakh. Next asset, other assets. This other asset 1.75 is not taken over. Only 3.2 will come. Let me write other asset. I would write 3.2. I would not write 1.7. The total is 3.2. What other assets are taken over? Come back to the balance sheet. We are just done with PPE. Now inventory 5.75, 7.1. Taken over correctly at the same value. 5.75, 7.1, 12.85. Next, we have trade receivables taken over at 4.3 and 5.8. Trade receivables 4.3, 5.8, together 10.2. Then we have cash and cash equivalent. Cash and cash equivalent 3.15, 2.85 plus 50,000 bank balance taken over. So 3.15 plus 2.85 plus 50,000. So here it will be 3.15, no problem. Over it is 2.85 plus 50. How much is that? 3,35,000. 3,35,000. We have taken over Bright Limited's cash balance of 2,85,000 plus Bright Limited sold that other assets 1.2 lakhs for 50. So that 50 lakh also we took. So we took over 2.85 lakh plus 50,000. 3.35. Understood? Then if you take the total, you will get this is the value of the assets taken over. But this is not it. We need to deduct liabilities from this. That's when we get NATO. What liabilities are taken over? Trade payables 3.4 and 2. Long-term provisions 1.5 and 0. Let me write here. Trade payables 3.4 and 2. Together 5.4. Long-term provisions 1.5 and 0. 1.5. Deduct 1 crore 50 lakh 65,000 minus 6 lakh 90,000. You will get 1 crore 43 lakh 75. Over here 85 lakh 90 minus 3 lakh 40 minus 1 lakh 50. 81 lakh. 6475 minus 2 lakh 62 lakh 75,000. This is net assets taken over by Rainbow Limited. For this they have given purchase consideration. To Light Limited they gave 80,000 shares of 100. To Bright Limited they gave 64,000 shares. Together they have given 1,44,000 shares. This is 80 lakh. This is 64 lakh. If they have given excess consideration, it is goodwill. If they have given shortage consideration, it is capital reserve. See, assets taken over 81 lakh. Consideration given 80 lakh, we have given less. It is profit. PC is lesser than NATO, then that will lead to capital reserve of 1 lakh. In this case, assets taken over is 62 lakh 75,000, but you have actually paid 64 lakh. You paid 1 lakh 25,000 extra. That becomes goodwill. On the net in the Rainbow's balance sheet, we cannot write goodwill and capital reserve both. There is capital reserve of 1 lakh, goodwill of 1 lakh 25. I will write net 25,000 of goodwill. So this is actually the balance sheet of the Rainbow Limited. This much is assets. These two are liabilities. This is share capital. And this 25,000 will appear as an asset, goodwill. I would write this. So just keep this in mind and draw the balance sheet. I am telling you why you should do this NATO. There is no marks allocated for this. Once you do this NATO, when you're doing balance sheet, you just have to look at this. If in case you skip this, every time you have to see here and there, here and there, here and there. Chances of doing mistake will become higher. So please do NATO computation whether it is mentioned in the question or not. It will save time in preparation of balance sheet and notes to accounts. Let's start. Let's start with share capital. Share capital is this. This is share capital. Am I right? How much is share capital? 1 crore 44 lakh, which is 1,44,000 shares of rupees 100 each. I would write my share capital 1,44,000 shares of rupees 100 each, 1 crore 44 lakh. Mandatory disclosure, entire shares 1,44,000 is issued for non-cash consideration. I have to mention this. Done. 1 crore 44 lakh is the total of notes to accounts. It will go to share capital, note number 1. Then reserves. Is there any reserves in the question? Let's check. Statutory reserve is taken over. Statutory reserve has to be written. Remember DRUMSS. Yes, statutory reserve. How much is their statutory reserves? Their statutory reserves in reserves and surplus irrespective of form of amalgamation, 2. But entry will be statutory reserve credit, debit will be amalgamation adjustment. This is the coolest reserves and surplus working note that you would ever see. I would write statutory reserve 2 lakh. I'll write amalgamation adjustment 2 lakh minus, it will be 0. If you don't write this, you lose 2 marks. But to write this, you won't even take 20 seconds. Plus alle minus alle ultimately 0. What will come in balance sheet? Note number 2, 0. Then, is there long-term provisions? Yeah, long-term provisions is Barana. So, in our NATO, share capital over. Next, this is the long-term provision. So, LTP, long-term provision, minus 1 lakh 50. I would write minus 1 lakh 50 here. Long-term provision of Light Limited. That itself is the total that will appear in the balance sheet, long-term provision. Next, let's go to trade payables. Trade payables, we have it here in NATO. Observe, trade payables, TP. How much trade payables? 3 lakh 40 of Light, 2 lakh of Bright, together 5 lakh 40. Come here, trade payables, Light 3 lakh 40, Bright 2 lakh, putting it together 5 lakh 40. This 5 lakh 40 I would write here. Trade payables 5 lakh 40. Got this? That's it. Liability side done. Asset side, we have PPE, lot of items together. Land and building, plant and machinery, and other assets together. I would write it as PPE. Sir, why are you writing all 3 of them together? Because that's what they have done in the question. So I would write them together as PPE. How much? 62, 44, 750, 450, 320 and 0. I would also write it the same way. Observe. That of land and building of Light and Bright, 62 and 44, 1 crore 6. Plant and machinery, Light and Bright, 7 lakh 50 and 4 lakh 50, 12 lakh. And other assets only of Light, Bright because we did not take it over, 3 lakh 20. Total them, what do you get? 1 crore 6, 1 crore 18, 1 crore 21 lakh 20. 1 crore 21 lakh 20 will appear here as PPE, 1 crore 21 lakh 20. Intangible asset, ide, goodwill. Goodwill. Here I wrote goodwill. See, intangible asset. This intangible asset of 25,000, let me write in the balance sheet straight. I don't need a note to account for that. 25,000. Then inventory, note number 6. See, inventory, we have it here. How much is our inventory? Every place I'm writing it again and again in detail. You can write it much simpler when you write. This is ultimate detail, self-learning type. Just if someone sees the PDF only, they should understand the answer types. 12 lakh 85,000. Split is 575 and 710. I'll write inventory 575 and 710, 12 lakh 85. Posted to balance sheet, how much? Posted to balance sheet, inventory 12 lakh 85. Next, trade receivables, note number 7. How much is trade receivables? Come on, have a look here. Trade receivables, this is, there you go. Trade receivables 10 lakh 10, which is 430 and 580. Right here, trade receivables 430, 580, 10 lakh 10. This 10 lakh 10 I would write here. Trade receivables 10 lakh 10. Last item, cash and cash equivalent. Don't forget 50,000 other assets, sale consideration. I would have written here cash and cash equivalent. How much is it? 3 lakh 15 of Light. Bright is 2 lakh 85 plus 30 plus 50,000. So 335. Together it is 6 lakh 50. I would post 6 lakh 50 here. Light 3 lakh 15. Bright 285 plus 15, 335. Together 6 lakh 50. This 6 lakh 50 would go here as 6 lakh 50. Everything's done, my friend. All that we need to do is take the total. Take the total on the liability side. 1 crore 44 lakh plus 1 lakh 50 plus 5 lakh 40. 1 crore 50 lakh 90,000 on the liability side. Take the total on the asset side. 1 crore 50 lakh. That's the tallying of your amalgamated balance sheet. Okay.